Hello traders, welcome to the channel. Let's see a weekly analysis or a narrative building in this video for the upcoming week in Nifty 50. So for narrative building, what we do as part of first steps is we mark the weekly range of current week's high and previous week's low. So this is going to be our trading range for the upcoming week. Then we see the price action in the weekly analysis, weekly basis. So from weekly chart, what we can see is price has moved up, came down for a retracement, and it is trying to move up. So market is currently bullish in weekly perspective. So then we go and see the daily perspective and see. So this is going to be our trading range from 25,700 to 26,250 will be our trading range for the upcoming week. So from daily perspective also we can see that market is currently bullish, and the last three trading sessions it has been slightly negative. And also from daily perspective, what we can see is there is a small demand zone which is left open out here. And if I mark you the structure in daily, this is our structure. It went up, came down, went up, but did not give a closure. So this is going to be our effective high. So market is currently in a more like consolidation phase. So the moment we get closures above this range, market will be bullish is what we can clearly see. And even though market is bullish, what we can also see from a daily perspective is there is scope for market to come down till here before going up. So these are two things which we can see from a daily and a weekly perspective. So moving on to 4 hours, we can refine this particular zone till here. So there is scope for market to come down here. Yeah, so this is a range. This was the last point where market broke structure with a closure in 4 hours, and market is in complete consolidation ever since then. So from a point of November 20th till today, market is more in a consolidation range. Yeah, in 1 hour, it is slightly interesting. We see two demands which are open. One is as part of the gap which market left out earlier. Okay, so these are the two gaps which I'm talking about. One happened on December 25th, and one happened on one happened on December 19th, one happened on December 18th. Market opened the gap up and again gap up, and these gaps were left open. So for market to move up, currently since market is in a negative direction, there is a chance for market. If we get a reversals like this, we can see the market even coming down till here is what we can see from a 1 hour perspective. So from 1 hour, I'll just mark you the supply zone. So this is going to be our supply because this is the last imbalance which is not retested by the market. And if market opens here on Monday, it will be a more ideal scenario for us to take the market down at least till the closing of last session. Moving on to 15 minutes, this is where we actually form the setups. Let's quickly check where SGX Nifty is currently put up. So SGX Nifty shows around 50 points gap up, around 26,120 is what it is showing. So somewhere around this place, around 50 points if we take from here, it is showing somewhere around this place. So from 15 minutes perspective, there are a couple of key points which we need to know. One is this supply, which is there, but market will not respect this much, but we'll just keep an eye open for this as well. If market opens flat and gives a negative reaction from this supply, we will be focusing on taking the market down. This is in 15 minutes. Okay, so from 26,080, if we get rejections, we can take the market down till 25,990, or also if a market closes below this, we can see some kind of reaccumulation before taking the market even further down. This is what we can see from a 15 minutes perspective. The same thing can happen from here as well. If we get rejections from here, So if market opens flat or if market opens gap down, I'm going to monitor these two supply zones, one at 26,170 range and one at 26,100 range. From somewhere here, if we get rejections, then we can plan to take the market down before going up. If market opens flat and comes down, I am not much interested in taking the market down, but rather I'm interested to take the market higher. Very, very simple. There are only two scenarios. We are going to try put either in this particular supply or in this particular supply. And if market opens gap down or opens flat and comes down, I'm going to try call if I get a confirmation from this particular demand. Or if it breaks this demand and goes down, let it go down. I'll try the same I'll try the same call option from this particular demand. Let me redraw this. So if market opens gap down and starts to come down, let it come down. If we get a positive closures from here, then I'm interested to take the market higher. So why we are doing this? Understand why we are doing this. So from a weekly perspective and from a daily perspective, we can clearly see that the market is bullish. So in spite of market being bullish, it has to react to orders. So what are orders? Orders are nothing but the open places where market are likely to be pulled down to. This is an open place and this is also an open place. And same applies on the upside also. This is an open place and this is also an open place. Open places are nothing but imbalances. Imbalances are most likely to be filled by the market before going in their appropriate direction. So summarizing it very shortly, try put from the supply or from the supply when we get a negative reaction, try call from this demand or from this demand when it comes a positive reaction from one of these two places. I have a course specifically designed for you which make you understand all the concepts in market structures, liquidity, how to trade reversals, how to trade continuations. All that will be covered in this course from a beginner to advanced level. So if you're interested to buying this course, let me know. Thank you so much. We'll meet in the next educational video.